Do you dream of retiring with $1 million fund? Or are you aiming for financial independence by seeking long-term investments with high growth potential? Not sure where to begin? Let's dive into what top investors are doing. In this video, I'll introduce 8 Vanguard index funds that can help you achieve your financial goals. We'll also explore how much Martin and you can earn from a $15,000 investment in each of these funds. Finally, I'll reveal an ETF that has the potential to turn $15,000 into a portfolio worth nearly $2 million. Number 8. Vanguard Total Stock Market ETF, VTI. This ETF provides exposure to the entire U.S. stock market, including small cap, mid cap, and large cap companies. With an expense ratio of just 0.03% and a current dividend yield of 1.5%, VTI is ideal for investors seeking broad diversification and steady growth. If Martin invests $15,000 in VTI, his portfolio could grow to $16,950 in just 1 year, based on an average annual return of 10.5%. Over 30 years, with consistent reinvestment, this investment could grow to $525,000. Why is VTI a strong choice? By covering the entire U.S. stock market, it minimizes risk through diversification, making it an excellent option for both beginners and experienced investors. Number 7. Vanguard Real Estate ETF, VNQ. Next on the list is VNQ, a popular ETF for investors looking to gain exposure to the real estate market without directly owning property. VNQ invests in real estate investment trusts, REITs, which own income-generating properties such as offices, malls, and apartments. With a dividend yield of 3.5%, significantly higher than most equity ETFs, VNQ is an excellent option for income-focused investors. If Martin invests $15,000 in VNQ, his portfolio could grow to $15,525 in the first year. Over 30 years, this investment has the potential to reach $495,000. Why consider VNQ? It offers steady dividend income and diversification through real estate, a historically stable asset class. Number 6. Vanguard Mega Cap Index Fund ETF, MGC. At number 6, we have MGC, a fund that focuses on large-cap U.S. companies with a market cap of over $10 billion. This ETF has a dividend yield of 1.32% and a dividend growth rate of 6.89%. Its average annual return of 10.9% makes it a great pick for long-term investors. If Martin invests $15,000 in MGC, his portfolio could grow to $16,200 in 1 year. After 30 years, the same investment could reach $411,900, including $160,500 in reinvested dividends and $251,400 in share price growth. What makes MGC appealing? It primarily invests in tech, healthcare, and finance sectors, with major holdings like Apple and Microsoft. Its solid track record makes it a reliable choice for stable, long-term growth. Number 5. Vanguard S&P 500 Growth Index Fund ETF, VOOG. Coming in at number 5, VOOG is an excellent choice for investors who prioritize growth. This ETF focuses on S&P 500 companies with strong growth potential, particularly in the technology and consumer sectors. VOOG has an average annual stock value increase of 12.76% and a moderate dividend yield of 0.9%. If Martin invests $15,000 in VOOG, his portfolio could grow to $17,060 in 1 year. Over 30 years, this investment has the potential to reach an impressive $620,400, combining capital appreciation and growing dividends. Why choose VOOG? With its focus on high-growth companies, particularly in tech, it's ideal for those looking for robust long-term returns. Additionally, its expense ratio of just 0.1% ensures minimal costs, allowing investors to keep more of their earnings. Number 4. Vanguard Dividend Appreciation ETF, VIG. At number 4, we have VIG, a fund designed for investors seeking consistent and reliable growth. VIG focuses on companies with a strong history of increasing dividends year over year, making it a safer option during market volatility. VIG offers a dividend yield of 1.9% and an average annual return of 9.8%. If Martin invests $15,000 in VIG, his portfolio could grow to $16,470 in the first year. After 30 years, this investment could compound to an impressive $485,000. What makes VIG unique? It invests in high-quality companies with solid financials and proven track records, ensuring a balance between income and growth. This makes it a perfect pick for conservative investors. Number 3. Vanguard Growth Index Fund ETF, VUG. Next, we have VUG, a fund that emphasizes growth by investing in large-cap U.S. companies with strong potential. With a dividend yield of 0.55% and an impressive annual return of 13.64%, VUG is an excellent choice for investors aiming to maximize capital gains. If Martin invests $15,000 in VUG, his portfolio could grow to $17,210 in the first year. Over 30 years, this investment could reach $702,300, driven by reinvested dividends and share price growth. Why consider VUG? Its focus on tech giants like Apple and Microsoft ensures exposure to some of the fastest-growing companies in the world. Additionally, its low expense ratio of 0.04% makes it an affordable and efficient choice for long-term investing. Number 2. Vanguard Russell 1000 Growth Index Fund ETF, VONG. At number 2, we have VONG, a fund that focuses on large-cap U.S. growth stocks. This ETF is known for prioritizing stock appreciation over dividend income, making it an excellent choice for long-term investors seeking capital growth. With a dividend yield of 0.69%, and a consistent annual stock appreciation rate of 14.27%, VONG has delivered remarkable results over the years. If Martin invests $15,000 in VONG, his portfolio could grow to $17,145 in just 1 year. After 30 years, this investment could reach $587,000, combining reinvested dividends and significant share price growth. Why choose VONG? Its portfolio includes top-performing companies like Apple, Microsoft, and Amazon, ensuring exposure to some of the most innovative and profitable sectors in the market. Additionally, its expense ratio of 0.08% makes it a cost-effective option for investors. Number 1. Vanguard Information Technology Index Fund ETF, VGT. Finally, at the top of the list is VGT, an ETF that offers concentrated exposure to the technology sector. This fund has consistently outperformed other ETFs in its category, with an impressive average annual return of 18.58% over the past decade. VGT's dividend yield of 0.73% might seem modest, but its 10-year compound annual growth rate, KGR, of 14.36% makes it a powerhouse for long-term growth. If Martin invests $15,000 in VGT, his portfolio could grow to $19,318 in 1 year. Over 30 years, this investment has the potential to reach $1,845,000, including reinvested dividends and exceptional capital appreciation. What makes VGT stand out? It invests in top-tier tech companies like Apple, Nvidia, and Microsoft, which are leaders in innovation and profitability. Its focus on the tech industry's growth ensures consistent returns for investors. The bonus ETF, Vanguard Total International Stock ETF, VXUS. For investors looking to diversify beyond the US, the bonus ETF on our list is VXUS. This fund provides exposure to international markets, including developed and emerging economies. VXUS has a dividend yield of 3.3%, making it an attractive option for those seeking income. If Martin invests $15,000 in VXUS, his portfolio could grow to $15,495 in the first year. Over 30 years, this investment could compound to $460,000, driven by steady dividend reinvestment and global market growth. Why consider VXUS? It reduces reliance on the U.S. market and spreads risk by investing in over 7,500 companies across the globe. Its low expense ratio of 0.07% ensures affordability while providing access to a diverse range of industries and regions. These Vanguard ETFs not only help you achieve your financial goals, but also build wealth over the long term. Now, it's up to you to take the first step. Start investing today and secure your future. If you found this video inspiring, please like, subscribe. Thank you for watching, and we'll see you in the next video.